Well, on the line now is Jameel Ahmad, Global Head of Currency Strategy at FXTM, of course, and Martin Strauss, Director of ShareNet Johannesburg, is in studio with us. Let's just kick things off with Jameel, as we always do on a Tuesday. Jameel, thank you so much for the time. The Rand last week, having gone very firmly below that 14 Rand mark, now sitting back at around 14.30 and 14.40 or so. It doesn't seem to be getting any more strength really from the market. Is there a sense of stability though now?
Interesting question, and thank you so much for having me. I think what's going on is that the market's been taken back by another relentless round of buying momentum for the US dollar. So yesterday the US dollar reached its highest level in around 1 year and a half, which has pressured global currencies around the world. I can't stress that enough. Its emerging market currencies have been hit by this news because you've got a stronger dollar that's always weighing on emerging markets. But even your major currencies like the euro have fallen to their weakest level since June 2017 approximately. So what we're seeing again is a dollar strength story, a lot of dollar divergence where traders just seem to want to pick up the dollar. Why? It could come down to two reasons. It's either optimistic central bank expectations from the Federal Reserve, but I do think this has been priced into the US dollar anyway quite some time ago, and it's not that much of a surprise that the Fed remain very upbeat on the US economy and central bank policy, or there's some sort of anxiety in the air that perhaps the optimism that US and China were going to get a trade deal done as earlier this month maybe wasn't as sincere as what we thought. And there hasn't been any more updates on this news since we had that optimistic headline 2 weeks ago that Trump said that, you know what, they've got the potential to make a deal. And this suggests to me that investors might be piling up on the dollar because of concerns that trade tensions might highlight and raise up once again before they are scheduled to finally meet in Argentina later this month.
To circumnavigate the risks then for the emerging market space itself, would you then rather just, straight up just head into the US dollar? Was there perhaps another way to perhaps look at avoiding the crunch that sort of is happening right now?
Generally speaking, the market environment in 2018, if you take away the first quarter, it has been that the dollar's been your go-to currency as a safe haven asset due to trade tensions, and the dollar has been the most highly bought. Gold also fell in line with dollar strength yesterday, so that's one safe haven asset we don't really see being as enticing as it would be in the past with market uncertainty. So that shows there is a lot of dollar strength because gold should be gaining more in uncertain times. Japanese yen, I would say this is the other safe haven asset that you can consider. Personally, I'm more favorable towards the yen than the US dollar, not because it offers that much more gains, but because it's very consistently performs as a safe haven asset. If there's market uncertainty, investors are very loyal towards the Japanese yen.
Jameel, appreciate your time there. Jameel Ahmad, Global Head of Currency Strategy at FXTM.